Hello, everyone. Happy new month. Welcome back to another weekend exploration of price action based technical analysis. In today's video, we are going to take a deep dive into the complexities of the GBPUSD market as the US dollar struggles to find demand after the disappointing October jobs report from the US economy. Last week, despite multiple attempts by sellers to push the price south, we maintained our composure and held on to our bullish buyers for the first 4 days of the week. Finally, on the last trading day, we saw a surge in bullish traction, resulting in over 600 pips from multiple entries. Congrats to everyone who are part of this profitable journey. And in fact, if you missed last week's commentary and would like to review it for educational purposes, you can find the link in the description box below or at the top right hand corner of your screen if you are watching on my YouTube channel. Looking ahead of the upcoming week, we have the United Kingdom's GDP figures on the docket for next Friday. In this video, we will analyze the current market structure from a technical standpoint using fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action in the days to come. But before we proceed, I want to emphasize that this video is for educational purposes only and should not be considered financial advice. My aim is to provide you with insight into the GBPUSD chart and enhance your understanding of price action analysis. Remember, Forex trading inherently carries risk, so always exercise caution and consider consulting a professional financial advisor before making any investment decisions. Without further ado, let's dive right into the details. So as usual, our analysis is going to kickstart on the daily time frame where I have an interesting and insightful setup ahead of the new week. So what I did here on the daily time frame was to take into consideration the nature of price action since the month of June. That's about 4 to 5 months of data to decide what we are likely going to be doing for this week. And one of the first things I observed here is that since price tested the highest point around the 1.31400 level, that was in the month of July, we saw how price nosedive to the downside and along the line formed the series of lower highs, which interestingly gave us this descending trend line, which we will be using to guide our decisions for this week. Now, in addition to this descending trend line is my key level for this week, which is situated along the 1.23100 area. And in fact, if you look at this closely, you will see how this level had played a major role in pushing price to the upside since the month of March of this year, and not until the first during the second half of the month of September, we witnessed a breakdown of that structure. And since then, price action had been caught within a range that was between the 1.231 and the 1.2100 area throughout the month of October, of course. Now, besides this whole structure here, if we take a closer look at what is going on here, you will notice that despite the strong bearish momentum that started in the month of July, we saw how it became difficult for sellers to break through the 1.21 area, hereby giving us something that looks like a consolidation phase. And in fact, if we take it a step further, it's more or less like price action gradually is transitioning into a potential reversal pattern where, interestingly, the neckline of this reversal pattern shares a beautiful confluence with that key level at the 1.23100 area. And of course, you know how we do it whenever we have price transition into what looks like a reversal pattern. We want to see price break out of the neckline of that reversal pattern to validate the potency of this reversal setup. And one more interesting thing about the structure is how the descending trend lines share a beautiful confluence with the neckline and of course the key level for this week. So a breakout of the neckline would also have broken out of the descending trend line, which will give us an insight into the fact that the trend line may no longer have the capacity to continue to negate the bullish attempt. So right now on the daily time frame, we have a simple reversal setup we will be using to guide our decisions for this week. However, there is another simple setup which I was able to identify on the 4 hours time frame, which will be the basis upon which we are going to be building our trading decisions for next week. But before we scale down into that 4 hours time frame, I would like us to run through the economic calendar, as you all know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So on the economic calendar for this week, we have a handful of high impact events from both the United States and the United Kingdom economic docket. Now, the first one here is coming in on the 8th of November, which is Wednesday. And in fact, we are going to be listening to the Bank of England speech and the Federal Reserve Chairman's speech too as well. And of course, we know how important these speeches are as they provide insight into the central bank's outlook on the economy, potential policy shifts, and interest rate changes, hereby impacting trading decisions and market sentiment. Then on Friday, we look forward to the gross domestic product from the United Kingdom economy docket, another very impactful event which provides insights into the overall health of the United Kingdom's economy. Then lastly, on Friday, November 10th, we have the Michigan Consumer Sentiment Index, another high impact event everyone in the market will be looking forward to. So with all these events lined up for next week, as technical traders, what we want to be doing is to sniff through the current market structure to look out for patterns and structures that we will be using to guide our trading decisions for this week. And of course, we know that the anticipation of these events alone has a tendency of influencing market sentiment, of course, which will dovetail to price actions on the chart. So talking about price action, let's scale down into the 4 hours time frame, and this is what I was able to come up with. Now, if you look at the structure, what I did was to take into consideration the nature of price action throughout the month of October, and in fact, we finally saw price breach that 1.2300 level, which I identified on the higher time frame as my key level. Remember, this zone here had played a major role in negating seller and buyers' attempt throughout the month of October. And not until last week, Friday, we finally saw price action break out of that zone, and this might likely be a new platform to incite an uptrend continuation. So how do we intend to capitalize on the next move going into the new week? Well, first of all, I want to emphasize that the highest point price action has been for this last week is the 1.239, giving us a range where there is a tendency for price action to do some consolidation phase before the next course of action will happen. So we might likely see a situation where price could retrace if selling pressure persists below the 1.239 back into the former supply niche, which interestingly shares a confluence with this ascending trend line I was able to spot here. Now, if this is the case, that is, if price comes back into the 1.23 area to retest the zone that was broken, then the appearance of buy pressure here, that is inability of sellers to break through our key level and the ascending trend line, will be all we need to capitalize on an uptrend continuation. However, if price drops down and breaks down both the ascending trend line and the 1.2300 level, then we will be back at the seller's territory, which could incite selling opportunities to push price south. So this is what I will be looking out for, and as you will see here, that zone between the 1.239 and the 1.23 area will definitely going to be our center of focus for next week, where depending on the direction of the breakout of the zone will emphasize where price is likely going to be heading to for the later part of the week. So these are my views on the GBPUSD, but trust me, I will be with you in the comment section on Monday morning after monitoring how participants in the market will be reacting to this current structure to give you an insight on what I think is likely going to happen. If you have found this content helpful and useful in making your independent trading decision for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so, and if you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you'll always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.